I wouldn't say correction. I think we're still in a boom, certainly not a correction, and definitely not a bust. But I do think what you cited is true. Home demand, buyer demand is so incredibly strong that it's the most common reaction I've seen so far from buyers to rates ticking up is, I hope this keeps other people home so that I'll have less competition in bidding, because we still definitely have multiple offer scenarios are absolutely the norm. Demand's way outstripping supply. As you mentioned, inventory is extremely low. Homes are only staying on the market for about 18 days right now. That's the biggest driver. It's not as though no one's selling their home. More than 6 million home transactions are taking place. But once they put that listing on, it's only staying on for about 2.5 weeks. So buyers certainly have their work cut out for them.
And how does that 18 days compare with normal? And where was it at the absolute sort of low point? Or is 18 days the low point?
We're pretty close to the low. I think we kind of flirted with 17 days at one point in time, but kind of in that 17 to 19 range is where we've been for a little while now, which is historic lows. So typically we're looking at twice or more than that in a more balanced market. You used to have the time to be able to go and view a number of houses maybe a week from now or set up appointments. Now you really need to strike while the iron's hot. Hopefully you're working with a great agent who's got their pulse on the market. And when you do, you're going to be informed about an opportunity. You need to be well prepared, already underwritten, have your financing lined up, and be able to make the strongest possible offer to step into that home. So it's an extremely competitive market. But again, more than 6 million homeowners are winning in that market every year, and we're still at that rate today. So it can be done.
The quandary, I think, is well illustrated in the existing home sales report this morning, which showed, like you said, not a ton of inventory, or at least not a ton of available inventory. It turns over very quickly. And yet, home prices are still going up. So we have home prices still going up. Mortgage rates now higher, so the affordability issue is getting worse before anybody might hope it gets better.
There's certainly affordability challenges relative to the very most recent past, relative to say a month or two ago related to rates. But keep in mind, affordability has still increased in many areas because of the internal migration. So for the most part, the moves that we have happening today are oftentimes individuals who are accelerating moves to perhaps lower cost destinations, maybe accelerating a move that we're going to make 5 or 10 years from now as they plan for retirement, perhaps. So you have areas like, for instance, a lot of the largest multifamily players out there are reporting that even though they've increased their rental rates, the affordability of their units relative to the income of the residents has increased as they're internally migrating throughout the country. Individuals have the opportunity to work a little more remotely than they did before. So there's still an opportunity to step into a more affordable home, even though prices have increased. And of course, some real wage growth helps there, too.
It's fascinating because you actually just answered the question I asked the economist John Taylor last segment, which was, why did the pandemic, a temporary phenomenon, unleash this lasting change in the labor market? And your answer about housing suggests what changed. Do you think people will be able to continue this kind of work from home trend that started? Or are we going to run into, and I wonder about this with a lot of people who I know, a boomerang effect where all of a sudden they feel like they have to, or they need to, or they got to get back to those jobs in the bigger markets, and this didn't turn out to be, you know, sort of the lasting change they were hoping?
There's certainly some magic that happens when people are together. So I very much believe in that. We've even converted our headquarters over to space for people to really get together and to work together, not just to show up and do solo work every day. However, I also think employers are perhaps permanently moving to a place where in a competitive labor economy, you've got to allow some flexibility. So even if someone has a workplace they're going to 3 days a week, that's a pretty big difference from 5, and it may allow them to move maybe 20 minutes a little farther out, a little farther on the train line, a little bit more by car perhaps, and that allows them to step into considerably more affordable housing, if indeed that's what they're looking for. We also have the Coldwell Banker launched our Dream campaign here on March Madness and across social, and that's really focused on coldwellbanker.com. Individuals going and being able to compare different cities and sort of dream with some data, and then ultimately with an agent what it's like to compare where I'm living today to where I might live in the future. The response has been overwhelming because I think there are people saying, if I can work a little more remotely, why don't I work where I love?
Oh, interesting. I'm now, you know, he's going to be watching basketball. I'm going to be looking at your dream data or whatever you're calling it. Ryan, we really appreciate you giving us a sense on the ground still of what's happening. Thanks so much for your time.